All right, let's be real, we've all been there. You find the perfect technical setup. The trend is your friend, you've got a perfect support zone, everything's lining up. You placed your trade, you set your stop loss, and you're feeling good. Then, bam, out of absolutely nowhere, a massive red candle just crashes down, blows right past your stop loss, and maybe wipes out your whole account in like 3 seconds. You're just sitting there thinking, what just happened? Well, it's not that your charts were wrong. It's that you just got caught in a trap.
And today, we're going to decode that exact scenario. The answer to what happened lies in understanding something called the news trap. And you know, the key to escaping it is realizing that fundamentals, well, they're the big missing piece in your trading puzzle. Okay, let's dive right in.
So for most of us traders, technical analysis is everything, right? It's our world. And a good way to think about it is like the dashboard and the GPS in your car. It tells you where you are, where you've been, and kind of where you're headed. But fundamental analysis, that's the engine under the hood. It's the raw, explosive power that actually moves the car. And ignoring it is like trying to drive a Ferrari without ever checking if it has gas in the tank.
So what exactly are fundamentals? Well, it's pretty simple, actually. It's just the study of a country's economic health to figure out what its currency is truly worth. So we're not just looking at lines on a chart anymore. We're basically judging the health of entire nations. Think of a country like a giant public company. If the U.S. economy is crushing it, its stock, the U.S. dollar, goes up. If it's in trouble, that stock price is going to fall. Now here's the good news. You do not need an economics degree for this, I promise. In fact, you really only need to get a handle on 4 key things. We're going to call these the 4 pillars that hold up an entire economy. And believe it or not, they're responsible for about 90% of that massive account-blowing volatility we see in the markets.
All right, let's meet these 4 pillars. First up, we've got interest rates. This one is the king. Second, there's inflation, which is like a silent thief. Third is GDP, and you can think of that as the country's final report card. And last but not least, employment. That's the fuel for the whole economic engine. If you can master these 4, you'll finally understand what's really moving the market.
Okay, Pillar 1, interest rates. This is the big one, the king of them all, the ultimate market mover. And I love this magnet analogy here. Think of a country's high interest rate as just this powerful magnet for global wealth. Money, it's simple. It always flows to where it's treated best, always seeking that highest return.
So here's the perfect real-world example of why this is so important. Let's say banks in the US are paying out 5% interest, but banks in Japan are paying pretty much 0%. Now, where are you going to put your money? It's a no-brainer, right? Well, big hedge funds and investors will literally sell billions of Japanese yen to buy US dollars just to capture that sweet 5% return. This massive demand for dollars is what causes a currency pair like USD/JPY to just skyrocket. It's a phenomenon called the carry trade, and it is an incredibly powerful force. Let's move on to